Welcome back. You're still tuned into Midcap Radar on CNBC-TV18. The stock on our radar is Dhanuka Agritech. It has signed a new agreement with Bayer AG for acquisition of crop protection active ingredients for 2 products. To discuss the synergies of the deal, the consideration that they've paid, and what is the growth outlook from here on, Harsh Dhanuka, the Executive Director at Dhanuka Agritech, is joining in now. Harsh, good afternoon. Thank you so much for joining in today. If you can start by telling us what is the consideration that you've paid for getting these rights to sell these 2 products in India and globally, how will you be funding it?
Yeah, so good afternoon to you. And so consideration we cannot share at this stage. Only after the closing we'll be able to share the consideration amount. And with respect to the funding of the consideration, it will be partly through internal accruals and partly through external sources through bank financing.
Okay. Could you give us a broad range of, what is it that you're expecting to pay? You don't have to give us an exact number. And also, what is the market size or the opportunity for these 2 products? What is it that they've been garnering as far as FY24 was concerned?
Sorry, I am not able to share any revenue numbers as of now. But soon we'll come out with the revenue numbers, especially in the next quarterly update. We will definitely share much more details about the numbers.
Okay. So Harsh, you're not able to share certain details because your agreement also says that there are certain closing actions, and that is only when you'll be able to give out the details of the agreement. What are these closing actions? Is it that you fulfill certain terms and conditions that are put forth by Bayer? Can you give us an idea on that? How long will that take to be completed as well?
Yeah, so closing actions include one, of course, is paying the consideration amount, signing off the balance agreements, which are part of this, and it is expected to be completed in the month of December.
So from Q4 of FY25, can we expect you to start selling these products in India and globally, and these revenues will start reflecting in your P&L?
So in the P&L, the revenues will start reflecting from FY26. And initially, we'll start getting the royalty payments after the closing of the agreement.
Okay, so you've mentioned that you have it, you have the marketing right, both in India as well as abroad. Now, is this an equal opportunity in terms of revenue share, both within India as well as abroad? And if you could share, I'm not sure whether you'll be able to give us any details, but what is the kind of split that you will be having, and what is the kind of split that Bayer will be having?
The entire revenue over a period of time will pass on to Dhanuka. And the India split is smaller, and the international piece is much larger.
So, Harsh, the question that arises is Bayer itself is an MNC. It has its footprints in Europe. It has a company in India as well. Then why this agreement with Dhanuka? What is it that you will be able to do that other companies globally or their setup won't be able to do? Because as you're saying, the split in terms of revenues will come in more from markets abroad. So can you explain that rationale to us?
Yes, so for Bayer, these products are not part of their key portfolio, and being an innovation company, they are coming out with new products, so they wanted to divest these products. And for Dhanuka's perspective, of course, it gives us an advantage to make our market presence in international markets beyond India.
So how much can you increase your export revenues by then? Because I don't think you have a bigger export pie currently, right? How much can you add on to it? And will FY26, if you can tell us what is the export percentage right now, how much will it increase to in FY26 once these products come in your portfolio?
So currently the export contribution in our portfolio is less than 3%. In FY26, it will increase substantially. Sorry, I cannot share the number as of now.
Okay. Harsh, let's ask a few qualitative questions and understand the process through which, you got these 2 molecules on board. First was there a pre-approval process, that you had to go through in order to get this particular order from an MNC? In that case, are you now qualified to go ahead and get more such molecules? And do you have any kind of agreement, that you are exclusive, to market products only with Bayer? Or do you also have opportunities from other MNCs to onboard their products?
So these are actual acquisitions of these two products. So it doesn't stop us from partnering with other companies in the future. And as Dhanuka is working with a lot of multinationals for introduction of their products in India, now with the presence in international markets, we can explore our existing products to other markets as well. Having said, answering your first part of the question about the qualification process. So yes, the buyer team had a pre-qualification process, and there was some study and research done by their consultants in India, and we were able to qualify to that. And after that, only they considered our proposal.
Are you in talks with Bayer for onboarding more molecules?
I cannot say that for right now, but in future, yes, that is a possibility.
It would be a possibility with other MNCs as well, Harsh?
It can be, but right now, nothing is there on the radar immediately.
So, the consideration amount that you won't be able to tell us right now, but would there be any other marketing related expenditure that you'll have to take once you are able to commercialize and sell these products outside? Or that is it? That is the kind of expenditure that you'll see?
No, the marketing and regulatory expenses will be involved because we'll be transferring the registration of these products in Dhanuka's name. And over a period of time, depending on each country's regulations, we'll be taking up the registrations over there. And in terms of marketing expenses, because for Bayer, it is not a part of their key portfolio, so they have stopped the marketing expense, but Dhanuka will be reinitiating the marketing efforts around these products because they are still having very good efficacy.
Okay, Harsh, you cannot tell us the revenue number right now, but are these high margin products? What does it do to your margin profile? Because the last time we spoke to you, the word was that you will be seeing 100 basis points increase in margins this year versus the decline that was expected earlier. Come FY26, with these products contributing to your P&L, do you think there'll be more margin accretion? Where do they fall in the margin picture?
So while I cannot share the numbers on the margins right now, but definitely they have a good margin profile, and the products.
Is it higher? If you cannot tell us the number, is it higher than the current product profile? If you can give us just an indication.
Yes, sorry, I'm not able to share that at this moment.
Okay, Harsh, not an issue with that. We basically wanted a trajectory, of the margin guidance. One question that we want to ask you is, at the end of Q2, you told us two things. Number one, as far as the revenue growth is concerned, you expect it to be at the lower end of the guided band. 16% versus what you had guided at the end of Q1 was 18 to 20%. Was that particular projection made considering, onboarding of these two products, or was that, not taking this into account? And also, similar question as far as margins was concerned, was this taken into account?
No, this is not part of any of our earlier statements.
And do you expect any contribution in Q4 at least from these two products? Because you're expecting to close it by December, right?
Some royalty amount will start coming in Q4.
Okay. All right. Harsh, well, we tried, but I think you'll be able to give us most of the details only after Q3. So we look forward to that. But thank you so much for joining in today and telling us that this is going to come on the P&L, some of it from Q4, most of it from FY26. The stock, though, is off from the highs of the day. But that is an important deal that Dhanuka Agritech has entered into with Bayer AG, Germany. We'll do one thing, we'll slip into a short break. On the other side, in our mid-cap spotlight segment, Vivek will put focus on infrastructure stocks with exposure to Maharashtra after the election win. Stay tuned.